global and European light vehicle sales improve in 2025? Which models top the Chinese and European electric vehicle charts? And the UK government introduces purchase incentives for EVs. This is the Automotive Update presented by AutoVista24. I'm Phil Curry, Special Content Editor at AutoVista24, here with the latest edition of the Automotive Update. I'm going to take you through the last 7 days of headlines from AutoVista24.com and the wider industry. This week, we studied the latest forecasts from EV volumes, and joining me to discuss these is AutoVista24 journalist Tom Hooker. Hi, Tom.
Hi, Phil. How's it going?
All good, thanks, Tom. So, let's dive straight into it. What were your main takeaways from the latest forecasts?
Well, my main takeaways were that global sales of light vehicles, which includes light commercial vehicles and passenger cars, are still forecast to grow by 1.1% in 2025. However, this was down from a projected 1.8% improvement in March's forecast. Now, looking at global electric vehicle or EV sales, which combines battery electric vehicles or BEVs and plug-in hybrids or PHEVs, are forecast to rise in 2025 at a much higher rate than the overall market. A growth of 19.8% is projected, which is an uptick from April's forecast. In turn, the EV share of global light vehicle sales is predicted to increase from 19.9% in 2024 to 23.6% in 2025.
Okay, that's quite a big difference between those two outlooks. So what were the main factors for both of those?
So first, if we take global light vehicle sales, there are multiple causes for this downward revision. Subdued order intake in Europe has continued. Obviously, we've had the US trade tariffs. There's also uncertainty surrounding broader trade duties, growing instability in the Middle East, and the continued Russia-Ukraine conflict. The double-digit EV growth I mentioned just a second ago is expected to come despite some governments phasing out purchase incentives and tax breaks amid mounting national debt, particularly in Europe.
And what's driving EV growth?
BEVs are expected to experience greater growth than PHEVs in 2025. This means BEVs are forecast to make up the majority of the EV market with a 65.1% share.
Okay, let's look even further forward now. How big is the EV share forecasted to be in 2026 and beyond?
Starting with 2026, EVs are projected to account for just over a quarter of global light vehicle sales. This is expected to rise to 42.2% in 2030, then 64.2% in 2035, and 83.1% in 2040.
So enough of the global forecast now. Let's dive into some of those region-specific outlooks. Where shall we be starting?
I think Europe is a good place to go to first, as there's been some interesting developments there. In March, EV volumes forecasted that light vehicle sales would grow by 0.7% in the region during 2025. But moving to the latest forecast, this has turned into a 0.3% decline, with several factors playing a part. But you can see what these are on AutoVista24.com. Now, despite this downturn, light vehicle sales are actually projected to bounce back in 2026 with an increase of 1.9%.
And what does this growth next year depend on?
Well, one of the biggest factors is the CO2 emissions targets and circularity requirements mandated by the European Commission. EV incentives in Spain, Italy, and the UK are also projected to have an impact. More affordable BEVs are expected to enter Europe, while Chinese OEMs are expanding in the region as well.
Okay, so has this changed the EV outlook then?
It has indeed. Electric light vehicle sales are currently projected to grow by 22.8% in 2025. This is a notable increase from the 14.3% increase in April's forecast.
Okay, let's move on to some other regions. What's happening in China?
Well, EV volumes has maintained its 2025 Chinese light vehicle market forecast with a projected growth of 2.7%. EVs are expected to represent 51.4% of all light vehicle sales this year, and this is up from a 44.3% share recorded in 2024.
And what's happening in Northern America?
The US and Canadian automotive markets are certainly not escaping the impact of the 25% tariffs on vehicles imported to the US. On a more positive note, a reimbursement scheme was implemented by the US government at the end of April, which offers OEMs tariff relief over a 2-year period.
So have these factors changed the outlook?
They have. Light vehicle sales in Northern America are currently projected to decline by 1% year on year, and this comes after 2.9% growth in 2024. The EV market is expected to fall from a 10.2% share in 2024 to 9.9% this year, before rising again to 11.1% in 2026.
Thanks, Tom, but don't go anywhere yet as we have more to discuss.
No worries.
And you can find these forecasts together with other great analytical articles on new and used car markets, residual values, and other automotive trends on autovista24.com. And while you're there, sign up for the free daily email bringing the headlines direct to your inbox. Also check out Autovista24's YouTube channel as well, where you can find our launch report series, webinar discussions, and What Is Explainer videos. I'll leave a link in the show notes. Also this week on Autovista24, we looked at the European and Chinese EV market performance in May 2025. Tom, you explored the European numbers from EV volumes. What stood out to you from the data?
For me, easily the biggest thing was the fact that we had 2 non-European models leading the European BEV and PHEV markets in May. This was namely the Tesla Model Y for BEVs and the BYD Seal U for PHEVs, marking the first time the latter car maker had topped a EV chart in the continent.
Okay, let's look in more detail at the BEV market first. Was there anything of note that happened in May?
There certainly was. The Volkswagen or VW group had an impressive month, with 5 models following behind the Tesla Model Y. This was the Skoda Elroq in second, the VW ID4 in third, the VW ID7 came fourth, and the Skoda Enyaq finished fifth. It was a similar story in the year-to-date bestsellers chart, with the Tesla Model Y leading from the VW ID4, then the ID7, the Skoda Enyaq, and the VW ID3.
And you mentioned the BYD Seal U led the PHEV market in May. Is it also top of the annual chart?
Actually, no. There's an interesting battle developing in the PHEV market, with the Volvo XC60 leading the way after topping the monthly table 3 times this year, followed by the VW Tiguan in second, which has been posting consistent performances. The BYD Seal U sits third, but could move up with more strong results. But that's enough about Europe. Phil, I'm interested to know what's happening in the Chinese EV market.
It was the Geely Jiangxing that dominated May's BEV registrations, with the BYD Seagull in second place, the Xiaomi SU7 placed third, while a Tesla Model Y finished fourth and the Wuling Mini in fifth.
So what did this do to the results of the market in the first 5 months of the year then?
Well, in April there was just 19 units between the top two. However, in May, the strong performance of the Geely and BYD models and the poorer performance of the Wuling Mini meant the Geely Jiangxing built a commanding lead in the 2025 total. In addition, the BYD Seagull closed the gap to the Wuling Mini, so it looks like the country's BEV market has an interesting battle on its hands.
And how about the PHEV market? Did the BYD domination continue?
It did. BYD placed 6 models in the PHEV top 10 in May. The Song Plus led the way, with the Li Auto L6 climbing to second place. Then came the BYD Song L, the BYD Kim Plus, and the BYD Seal 06 in 5th place.
Okay, so what did that do to the annual table?
Interestingly, despite losing volumes year on year in 4 out of the first 5 months, the Song Plus remains the most popular PHEV in China. It also has a healthy lead over the BYD Kim Plus in second place, which itself has lost volume in every month between January and May. So it really is a case of these models bucking trends. The BYD Song Pro ended the period in 3rd place, continuing the carmaker's domination of the market. The UK government has announced purchase incentives for battery electric vehicles in a bid to help increase demand for the technology. The plans will see up to £3,750 or €4,331 offered against the price of models eligible for the scheme. car makers have begun applying for their vehicles to be part of the plans, with only the most sustainable receiving the full grant. Those vehicles that meet just some of the environmental criteria will receive £1,500 off their list prices. The amount of grant available per vehicle will depend on the level of emissions associated with production of the vehicle. The scheme is only available to those models priced at £37,000 or below. But the Financial Times has reported that some industry executives believe the eligibility system is a mess and could lead to uncertainty, which is the last thing the UK market needs. Others are concerned that subsidies targeting only new EVs would lead to value destruction in the second-hand car market, which could ultimately lead to higher finance costs for new EVs. The government has also announced £65 million in funding to boost the UK's EV charging infrastructure, including plans for all local authorities to place covered gullies for charging cables in pavements so those with no off-street parking capabilities can still access domestic charging. If you'd like to explore today's stories in more depth, head to the show notes and click the link to our companion article on autovista24.com. A big thanks to Tom Hooker for co-starring in this episode, and to Autovista24 web editor James Roberts for co-producing. The music was Better Find a Solution Fast by Richard Ames. Thank you for listening to the Autovista 24 podcast.